Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%.
Welcome back to Arc Salt Lake on this Thursday. It is now 7:31. That was Federal Reserve Chairman Kevin Warsh making the announcement that interest rates are remaining the same. So joining us now to explain what this could mean for you is Zions Bank senior economist Robert Spendlove. Robert, thanks for coming on this morning.
It's good to be with you.
Okay, so give me your reaction to what happened yesterday.
Well, what we saw is, it wasn't unexpected. We've got a new Fed chair. For years we had Jerome Powell, and Jerome Powell was a very traditional Fed chair. And what the Fed has been doing for years is they've been messaging where they're going to go, what they're thinking, and kind of where they're going to be setting those rates. We call that forward guidance. But we've got a new Fed chair. Kevin Warsh is going in a totally different direction, and he's saying that they're not going to give as much direction on where they're going to go. They're not going to give as much information about what their reasoning is. And he wants markets to have a more active role in determining where interest rates are set. And so, it wasn't unexpected that the Fed held that rate constant, but we're starting to see some cracks in the Fed, in the actual Fed board, where we had 3 of the Fed governors dissent or disagree with the Fed decision to hold that rate constant, saying that they think the Fed should have increased that Fed funds rate in the meeting yesterday.
Okay, so the 7th straight month of no cuts, what does that mean for the economy as a whole?
Yeah, so if you kind of think about monetary policy, so the way the Fed tries to help influence the economy is through their interest rate decisions. So the Fed, central banks have this huge ability to buy and sell treasuries, mortgage-backed securities, bonds, and through that, they can really influence the overall size of the economy. The Fed has, over the last several years, been dropping interest rates. That was after a dramatic increase in rates following the pandemic. The Fed, we got rates up to about this Fed funds rate above 5%. They had been dropping that rate down to about 3.6%. And the hope was that the Fed would be able to continue dropping that rate into this year. And, that's kind of the big change, is the expectation. Is going into this year, the Fed was expected to continue to drop rates into this year. But then over the last 9 months, or like you said, 7 months, the Fed has stalled and they've stopped dropping those rates. And now it appears, and this is the big question, right? The debate is whether the Fed will now start increasing that rate, when they'll start increasing that rate, and how quickly they'll increase that rate. And we just don't know at this point.
So we're also watching what's going on across the world, across the country. Do you think that the Iran war and the recent tariff announcement, do you think that impacts this in any way whatsoever?
Yeah, it has. In fact, it has a huge impact. So, so what we're doing is, when you think about the data that the Fed is dealing with, what's the best measure of inflation? How do you measure what's happening? Do you look at the official data that we got? By the way, we got a new official data this morning, just an hour ago. And that official inflation data said that inflation slowed down to 3.7%. And core inflation slowed to 3.3%. Now, by the way, number one, that's still too high because the Fed's target is 2%, not 3.3%. Mm-hmm. But then number two, that data, even though it just came out an hour ago, it's a month old. So it's backward looking. And then you say, well, what's happened in the last month? Well, we've had an escalation of tensions with Iran. We're having these surprise attacks. We're having retaliation. We've seen the price of oil jump back up again, where it was down to about $70 a barrel. This morning, it's now back up to $83 a barrel. And so what will that do to gas prices? And what will that increase in gas prices do to inflation moving forward? That's why it's so hard to figure out what the right path is and what action the Fed should take. Do you base it off that historical data that's more complete, or based on the more current data, which is really volatile and it's really hard to interpret and understand?
Well, the president had obviously made a big deal about wanting Jerome Powell out and appointing a new Federal Reserve chairman. This new one, his new appointee, is in now, and for the second time, there's been no rate cut. So how big of a deal is that, do you think?
Yeah, and a reporter asked the president that very question. To his credit, the president is not pressuring the new chair. He said he essentially said that he supports Kevin Warsh, that he trusts Kevin Warsh, and that Warsh has to contend with the committee, which is absolutely correct. That the chair of the Federal Reserve does not make that decision. Now, I don't know how long the president will continue to support the Fed if they actually have to start raising rates, right? Just like he said, the president wants them to drop rates, but the market is expecting them to raise that rate. The market has now given the Fed, or they've given Kevin Warsh 2 meetings, to kind of get his feet under him. And I don't know that the market is going to have too much more confidence in the Fed if they don't start taking action. So I think the market is going to expect the Fed to start doing something in their September meeting if we don't start seeing that inflation getting markedly better in the next couple months.
Okay, well, let's go back. Let's perhaps end with this. It's something you mentioned in the beginning. The vote split here. 3 people suggested raising rates. How significant is this vote split?
It's significant. And it goes back to, so here's our fundamental debate. This is the debate going on with the Fed and the debate going on with markets right now, is how active of a Fed do we want? Do you want the Fed actively managing the economy, actively addressing this inflation? Remember, inflation has now been above the Fed's target for 5 years. And, Kevin Warsh said, we will get this inflation under control. Well, the tool to get inflation under control is raising interest rates. And so, you've got 3 of the Fed governors saying, we need to use this tool to get inflation under control. But, Kevin Warsh is saying so far, well, let's just wait and see. And so the question is, how long do you wait and see? Should the Fed be taking action now, increasing rates, slowing down the economy, slowing down this inflation, or should they continue to take this wait and see? And how long can they wait before that inflation maybe gets away from them?
Okay, Robert Spendlove, senior economist with Zions Bank. Thank you so much for always coming on and kind of explaining to us what all of this means. We certainly appreciate it.
It's great to be with you.
All right, we'll see you next time.